So guys, in this situation now, you can now see we are still in 2 hours time frame now. 2 hours time frame, these higher time frames have already shown you the direction. You have already have something in mind that the market is aiming for. So what is left for you? What is delaying you? Because you don't have the money to just jump into this market just because it is going to sell, because you are trading with just below around 1k or below 1k. You understand? So now what you now do is that you need to go to a lower time frame, maybe 45 minutes time frame, to now see the possible place where you expect this market to kind of sell from. So that possible place is now what you are looking for. Then as you are looking for it, you now see that as you are changing it to 45 minutes, you now see that you are seeing another internal reactions. Those internal reactions will now still help you to pick out a zone. So now looking at it now, the market was, what did the market do? The market broke this zone. After breaking this zone, the market came back and retest this level, the left shoulder of this zone. After retesting this level, after breaking this zone, broke this zone, showing the market selling. Then this market pulled back and retest to come. Let's see, retested that zone. Sorry, but it didn't pick it. Then what happened? This one came back to the almost the head or this level, and before selling again. We took, those of you in our premium channel, we took this trade. This was the trade we took yesterday. Yeah, we took the sell yesterday being 10th of September. This was the sell that we took. So now taking this zone out, as you now see this movement this way, then what are you now looking for? You're looking for a place to sell. Now that you're looking for a place to sell, now that you're looking for a place to sell, then remember you're looking at this zone and this zone. Then I'll place my trend line, marking out these highs. When I paste it, sorry, I inverted the chart. I normally invert charts to kind of create another view, so that my brain will not be sentimental. I will not be like judging one part. I always change it. Imagine this market is on the downside, is it bullish, bearish, anyhow? Because sometimes you do not know that you are good at marking out, identifying bullish structure, but bad at identifying bearish structures. So it's whenever you are changing the market this thing, inverting the charts, it helps you to kind of balance your sentiments so that you'll be able to make a refined decision. You understand? So now going forward, now you can now say, okay, I have seen this zone. This zone was the left level that this market made a hit. After it, we have this zone, but we had a clear of liquidity of this zone. So now what I will do is that instead of putting just change of the breakout structure there, I'll remove my breakout structure. Remember, all those breakout structure we have also a support and resistance zone. So I will remove it now and change it back to my former support and resistance. Instead of putting it on that block, then I will mark out the support and resistance levels. Now I now have 3 levels I am waiting for. Now that I've marked out my 3 levels, then I'll go back to lower time frame, maybe 15 minutes time frame. Now I'm on 15 minutes time frame. The movements of the market, this market have started ranging. That is how crazy gold can be. Because this market is ranging, I'll now look forward. Where are the possible zones? The market have tested this zone that I marked out. You can see that the market tested it and reversed. So people sold from here, but this market is still making the range, which I am scared currently to sell it from that zone. Why? Because all of us knows that when the market is making this curve at times, you see it shooting up and dumping. You understand? So because of that, my money cannot afford to place this trade here and cover this stop loss because of this shoot. So what I'm going to do is that I will mark out this level that I have here. Now, if you notice, when I'm marking this level, I made sure that it made an equal high to this zone. So what did I just do? I marked that level to this level, and I marked it that way. And if you trace it backward, you can see that this market have actually played a very big role at this particular level. That means it's a strong level that market always vibrates from. You understand? So now, then I'll go to 5 minutes time frame. Now I've already removed this particular first one out from my options. The market decides to sell from here, good and fine. I am not rushing it. But the market decides to pull up to this zone, I will look for my sell. Or you come to this zone, I will look for my sell. That is why you risk a little. You understand? So now I am currently on 5 minutes time frame. Now that I'm on 5 minutes time frame, I will readjust all my structures that I marked out. You can see that now it is looking perfectly well to us, like clearly to us. Okay, this is actually what is happening in this market. So now that we have made this movement, now you now mark out, do the same thing and mark out this zone here. Then after marking out this zone, you also mark out this level. You understand? You see how I just marked it out, this high, then it showed me that, oh, this is a trend line that the market might respect. Then marking out this zone, this is the resistance level the market has been respecting. Then you now bring analogy. For those of you that have not watched our previous video, go and watch it. Now that you have made this structure, it is now looking as if this is an ascending triangle. How I explained it in my previous video about ascending triangle, market making this kind of triangle. So whenever market made this kind of triangle, we expect the market range this way. Then you see kind of a pull down, then pull up, then sell. Or you see it pull up, retrace and buy. You know, if it is acting on an uptrend, it will buy. But when the market is acting this formula, close to a resistance zone. You will see the market making this level. It firstly pull down from this zone, then pull up immediately. So test that resistance level. After testing the resistance level, the market will now sell. These are the possible ways, and that is why support and resistance is very important. So now that I've seen this structure now, I can now say, okay, let me be patient. Now I don't need to launch the market, because you know you don't have much, and market is not a trading is not a scam. You understand? So you just have to be patient. Then what are you now waiting for? It's just like when the lion is waiting to catch a meat. So you just wait for this market to do the yama or the rubbish you feel like. You trade, then come to this zone and dump. You understand? Then you will now go to maybe 3 minutes or 1 minute. Then no time. I want to just drop sharply go to 1 minute. Now go to 1 minute now. You can extend the market. Going to 1 minute now. You can now see, okay, I know no need of me looking at this zone. It is out of my picture already. Where I'm looking at it, areas where this market can decide to make a big move. Why? Because what I'm waiting for is for me to catch a big move that will sell the market to this particular zone, which is a big investment or big capital reward I am waiting for. I also catch the big fish. So me personally, what I normally do is that if I am taking this trade and I place my stop loss here, and I place my entry there, I place my stop loss here. Now remember, 0.1% on gold is up to, if I use 0.01, it is up to 3 point something dollars. You understand? So the reason I know more about calculating it, like I can calculate it with my head using percentages, because I am more of a crypto trader. Yes, you understand? I trade crypto a lot than gold. So now, for those of you in pips that is counting pips, so you can just deduct, you can just do your calculation from here to here to know how many this thing. So these 3649. So what you just do is say 4, you say 3636, remove it. Then just say 52.847 minus 49.174. So do the calculation, or I think there is a bot that they use to do the calculation in terms of calculating the pips. So now, because maybe you cannot afford to risk this, to risk up to this amount, then you cannot decide. So instead of breaking this level, remember when you mark that to your order block, this zone to this zone, what you're literally saying that from this zone to this zone is the area of your demand zone. You understand? Or supply zone, sorry. So now that means that you can decide to take this particular zone, take your entry to the upside, meaning that this market, when it comes to this zone, when you pull up and come to this zone, it might not just pick this zone to dump. It might maybe pick and make a try to clear the down part before going high, and by then you'll be in the market. So when you make that move, you have extended your stop loss, securing a better place for the market not to hit you. Then you take a trade from there and place your trade. So this is the possible zones. Then you put another one in case the market tries to violate all the rules. Violate the first one using the wick to clear all these people and pick this one. You can see, because you have done your touchdown analysis, to pick another zone for your entry. So when you pick it this way, what you should do is just what I normally do. I have my reasons to avoid mental manipulation. Place an alert. Sorry, the reason to not place it because I already have so many alerts. You can see, if you check here, you can see gold at 3.6. You can see that with analysis we made, I have already done it. We see gold at 3651.3.29. I set an alert there. Then there's another one, GBP JPY 199.406. I set an alert there. Then CAP JPY 106.154. So after setting the analysis, your alerts that way, then just go out, play your game. That's why you see me having gaming system. You understand? I have a gaming system. I'll go and play my game, keep my phone beside me. My laptop, my system is on, my desktop, everything is on, and I play my game. Once the alerts sound, I'll come back to the chart and look at the chart. Now, how do you place the alert? You don't just place the alert at your particular entry. You place the alert when the market is like close to your entry. So that market will trigger your alert before going to your entry. When it triggers your alert, you know that, oh, market is close to my entry. Then you come and watch it. So thank you so much, guys. I believe that with this analysis, with this video, if you didn't watch it from square one or from part 1, please try everything possible to go and watch it from part 1 so that you can know how we arrived at this situation or this level. You understand? Thank you so much, guys, for joining. And for those of you that is following us on TikTok, please mind you, we have issue with our account, so we have a new TikTok account. So just go to TikTok, the same CAPITALFX, and search it. You will see a new account. Follow it, share it with your friends, like the videos that is there, short videos that we posted. Then always be at alert because we go live on TikTok. Thank you so much, guys, and enjoy your night.